What is up, everybody? Jarrett from Empire of Assets here, and today we have a special guest, some Pokemon product that was bought at retail prices. This was found at a Barnes & Noble near me. I did pay retail, which was $30 for this guy. Don't really have any plans for it, but it is important to our conversation today, which is, why is sealed investing so safe? What makes it so safe? Why is it similar to like a mutual fund in the stock market? Why is it so low risk? And just why is it really beneficial over other kinds of investing? I have seen more people finding sealed product on the store shelves, and my prediction back when this channel started, or a couple weeks ago, was that in 3 to 6 months you would be able to walk into any store and buy pretty much any Pokemon product that you wanted. And I think it is starting to come true. I have definitely seen some other YouTubers finding product on the shelves. Not a lot of product at this point, but I definitely think it's going to happen. I do think there's going to be a huge buying opportunity in the next couple of months. I think there's still quite a few people holding product that are not trying to hold it for the long term. They're just in it for the quick flip. And I think that when the prices start falling, I think they're going to get cold feet. They're going to get scared. They're going to start dumping out massive amounts of product. It's going to be a race down to the bottom. And I definitely see, especially the new stuff, selling for retail prices, possibly even some not so popular stuff dipping below. I don't think Shining Fates will do that because it is so popular with the two sets it's based off of doing so well. I don't know if I see this one dropping below too much, but definitely some of those less desirable sets I could see being able to buy at retail pretty easily, just because I do think people are going to start to panic now that people are out and about and spending their money on stuff other than Pokemon, getting back to real life or real outside life with events and sporting events and concerts and all that kind of stuff. So I do stand by my prediction. 3 to 6 months, any store you want, be able to buy Pokemon products. Going to be some good buying opportunities. But let's talk about today's video topic, which is going to be how sealed product kind of acts, why it is so safe, and that. So I do have a finance background. I did my undergrad in finance, so I do understand a little bit about how the stock market works. And basically, there is two types of risk. There is total market risk, which means if the economy collapses, most businesses are going to see a loss in business and there's nothing you can do about it. And then there is business specific risk. They have fancy names for all this, but I'm just going to use the easiest terms that I can. So business specific risk would be if the CEO of the company comes out and says something that is inappropriate, not socially accepted, and people look disfavorably upon that company. Something else that could happen, the founder could get hit by a bus and suddenly the company is basically worthless without the founder. Any number of things can happen to just one company. Say they own a big building and it burns down. Anything like that is going to be specific to one company. So it's systematic versus unsystematic risk. Systematic is going to be affecting the whole system. Unsystematic is going to be affecting just one company in that. So how does this relate to cards? Well, if we keep going with our stock example, basically what you're going to want to do to have the safest investment is going to be invest in a whole bunch of companies so that you eliminate that sort of systematic risk. If one company's building burns down, but you own 10 companies, then it's a lot less big of a deal because your money is spread across all those different companies. And obviously the odds of all 10 companies' buildings burning down is significantly less than just the one company. So you lose a lot of risk, you still get pretty similar rewards. And this is how basically a basic stock market principle of why diversification is known as the only free lunch in investing. So then this brings up mutual funds, what are mutual funds? Mutual funds are just an easy way to put your money into a big pool of money, and then the people that run the mutual fund are going to go out and buy all the other little companies so that you don't have to spend the time buying little chunks of all the companies, and that your money is invested in all of those like it is. And then an even easier way to do this is going to be things called ETFs, or exchange traded funds. and that is instead of mutual funds, which have a lot of rules about when you can put your money in, when you can pull your money out, how much you have to do. ETFs are just going to be mutual funds that are traded just like stocks. So for a $100 share of this ETF, you can buy it for $100, and then your money does the same thing it was in a mutual fund. So it's going to go into a big pot of money, and it's going to get split up into all other things. This is definitely the safest style of investing for probably 95% of people. This is what everybody should be doing. The fees are incredibly low. I personally like Vanguard. I'm not affiliated with them in any way. They just have the lowest fees. They've been doing it for a very long time, and they have very good funds set up. I believe the fees that I pay on some of mine are like $3 per every 10,000 you have invested. So it'd be 0.03%. So incredibly low fees. I think even the highest I think I have is like $8 on 10,000. So you're paying basically nothing to have a great big spread of diversification across the market. So now that all of that is out of the way, how does sealed Pokemon act like that? Well, basically, if you buy just a single Pokemon card, let's say, trying to think of the card in this set that's really popular, like the Charizard the Shining Charizard VMAX, right? You buy one of those for $100, and suddenly that card dips to 50. You just lost half your money. In this box, however, when you buy these, you're essentially buying a chance at any card in the set because you don't know which cards are inside of this. So by doing that, say the Charizard drops, well, you don't have just the Charizard. You own essentially a little chance or possibility at every card in the set. So the value of this box is based off of all of the values of the cards in the set. This is especially important in sports cards, more than Pokemon, because you have players getting injured, you have players getting switching teams, getting dropped, not playing. Injury is going to be the biggest thing. But then instead of just buying a single player's cards, you're buying the entire draft class, basically the entire NBA market, but particularly that year's draft class. So if you went out and bought a 2020 Prism basketball box, you're buying all of the rookies. So you're buying Zion, you're buying Ja, you're buying all of those guys. So if one of them gets hurt, well, if you just own that one card, it's going to lose a lot of value. If you own the whole box, it's not going to lose that much value because that player's value inside the box is just a tiny little fraction of the whole box. Pokemon works sort of the same way. Obviously, you don't have the Charizard's never going to break his leg and not being able to play. So Pokemon is inherently a little safer than sports because of that. But you do have a lot of market fluctuations. Recently, the full art trainer cards have really blown up, whereas if you were in Pokemon, you would have missed out on the trainers running up. If you owned the full sets, you basically capture all of that value on the way up as the trainers blow up in value as well, because there is a chance that your box contains the trainer. On top of this, you also have the gambling aspect. So people love that there's a chance at a $500,000 card inside of the box. And by holding the box, you basically, it's like being the lottery and not being the person buying the lottery. You get to be the casino essentially in this effect, or in this case, which is very powerful because it's just something that the average person can't do. You can't go out and open up a casino and let people take gambles on stuff. But by owning sealed product, essentially that's what you're doing, because other people are going to pay a premium to be able to have that chance to gamble on the product. So this is kind of why sealed product acts like that. The consequences of this are going to be that the values are much more steady. This is why you see sealed very rarely ever drop below retail price, because it's just, that's what it costs. It's not going to go below that because it just doesn't. However, on the flip side, the big downside is you're not going to see those, I mean, we have seen, but normally you're not going to see those incredible doubling, tripling, quadrupling of prices where you would if you bought one card. So going back to the basketball example, say you buy a basketball player, just that one player, and he drops 50 points in a game. Then his cards are going to double or triple, where the value of the box that card's found in is not going to double or triple as well. So that's very high risk, high reward. just like everything in life, the risk-reward trade-off is always something to consider. If you're in it for the long haul though, I definitely think sealed is the way to go. I think both are the best thing to do. For those of you that don't know, I started with Pokemon, or that's what I got heaviest into because that's what I knew as a kid and that's what I enjoy the most. But my sort of business strategy here is I have bought some sealed. I'm going to slowly accumulate modern sets as they come out. However, the problem with that is it takes about 3 to 5 years to see any real return on your money, and it's a lot of money up front, with Elite Trainer boxes being about $50 a piece. It's a big expense to buy. Even a case is $300. 4 sets a year, that's $1,200. Sorry about the train in the background. Can't do much about that, but I will just keep talking over it. Hopefully with a new microphone, you guys can't hear it too bad. But anyways, like I was saying, $1,200 a year in just that with no special sets. And that's if you're only buying 6. Your money's not going to go up that crazy. So then to complement that sort of really safe strategy, I do the flipping. So I buy vintage cards, I get them graded, and that's going to be the sort of high risk exposure, but it's also allowing me to force value into those cards by finding cards that aren't graded, that are very clean, and then getting them graded. I'm forcing appreciation into those cards so that they are worth more, and then I can sell them for more. And then what happens with that money? Well, I use part of it to buy more cards to grade and then flip, but then I also take a small chunk and buy more product like that. And that is sort of a great way to diversify yourself from the big swings in the singles card market into more sealed, but also having some fun, because let's face it, like that's what I really enjoy. Just buying sealed and looking at that is not that much fun, but looking for deals all the time, it's fun. It keeps me busy, it keeps content coming for the channel, and it's just what I like to do. It's fun to hustle, fun to grind, do stuff like that, and it also provides much better returns, but it is much higher risk. So that's kind of my thoughts on sealed investing. I would love to hear if you guys think anything different. I think it's really funny that a lot of people say they can't buy sealed because they'll just have to rip it. I don't know. That just seems very bizarre to me, that you don't have enough self-control to just keep something sealed. I guess if that's a problem, put it in a sort of locked thing that maybe your significant other or a friend has the key to, so you can't get into it. Keep it at your parents' house, keep it at somebody else's house that you trust. Keep it in a safe maybe with a combination so that it's hard for you to get into. But I really do think that if you want to be successful in this game, you do have to have some sealed, or at least the advantages that sealed offer is very significant. You see very large collectors like Rudy from Alpha Investments invests very heavily in sealed. He has millions of dollars worth of sealed product. And it's just sort of a slow, ever-growing ladder. You buy a case this year, or a case of the first couple sets, sell a couple of those, get some profit, buy 2 cases, 3 cases. Pretty soon you're buying pallets of product. It's just a slow grind with the sealed. But now you guys know why it acts the way it does in that sort of slow way. It is very, very similar to a mutual fund or an ETF on the stock market. So I hope you learned something from this video. Leave a like, subscribe for more content like this. Comment your thoughts on the video. They do help out the channel a lot, so I appreciate it. Otherwise, thanks for watching, and I'll catch you guys in the next video.